Welcome back to Business Week here on Arise News. Joining me to review some of the week's big stories is Ifeoma Finnih, an investment banker and energy and infrastructure executive with over 15 years of experience in financial advisory, structuring and closing of project finance deals worth over $7 billion in infrastructure. Thank you so much for joining me.
Thank you very much
Good
for
to
having
see you
me.
on the program for the first time, I believe.
Thank you for having me,
Rolake. So the first story, which is quite interesting, is the big tech layoffs. Microsoft announced 10,000 jobs were going this week. And of course, we saw a few days later, Google Alphabet.
Yesterday.
Is this the beginning of the end for big tech? What are your thoughts?
So honestly, Microsoft has joined the wave, right? So we saw Amazon earlier in the year, 18,000 jobs. We saw Twitter, 3,700 jobs. Meta, 11,000 jobs. So they really have just joined the wave. And the CEO of Microsoft earlier this week, in his letter, pointed to three things, which I agree with. So post-pandemic habits, global economic conditions, as well as the advancements of AI. And if you just break down the post-pandemic habits, it's not hard to see. So during the pandemic, we saw people moving online, experiences like travel and all of that shut down. But then once the pandemic started, easing off, people are moving back to their pre-COVID spending habits. And so we can see definitely that, all the profits, all the earnings and everything, they have to sort of ease back. So we can see a normalization happening with the tech firms.
I mean, you say a normalization, which some would argue, but is it also a sign, we've heard the IMF and the World Bank talk about a possible global recession.
Yes.
Is it just a case of these corporates also tightening their belts in anticipation that they're going to be entering difficult economic times? Their fourth quarter results are just about to be announced. So could that be a factor?
I think so. So global economic conditions, definitely, they are not insulated. The tech industry is integrated into the global economy. And so as businesses take these decisions, definitely they're pulling back and they would reduce spending. And so, yes, definitely they are reducing their spending. So it's definitely possible that global economic conditions are affecting. That's not to say that investments will not be made, right? So as they're cutting costs and all these layoffs, they are making investments. So recently, the CEO of Microsoft just announced a $10 billion investment into OpenAI, the makers of ChatGPT. So that's really interesting. Yeah. And so it'll be good to see the advancements that happen in that space.
Yeah, interesting about technology replacing jobs. We could talk about that all day. But another story I want us to talk about, at Davos, Christine Lagarde, ECB chief, announces that they're going to stay the course on rate rises. I mean, is this a sign that central banks are just not able to curb inflation? And what does this mean for global growth?
I think all eyes were on Davos this week, with all the pressing issues, climate change, the war, inflation. But there has been some positive news in the markets. So the deputy managing director of the IMF mentioned that we may not be entering a recession towards the end of the year. They may update their forecasts. And so I think for the central banks, it's really just, for everybody to exercise caution, to say that, inflation may not have peaked. We will stay the course. We will continue to target inflation. So the Fed last year also raised rates 4.5%. The Bank of England as well, 3.5%. Even though the Eurozone is not as high, they're just telling us, we're going to stick on this until we bring inflation down.
Of course, we know that these bankers are trying to be cautious, obviously. But what do you think the implications for the rest of the world is? I mean, this ECB move, because we know capital flight has been a challenge for emerging and frontier markets in recent times.
So definitely, this is still going to happen, right? So you have inflation. You have inflation, and so it's still going to be. Sorry, I missed that question.
No, the issue of capital flight. So with interest rates rising in the global north, investors being attracted to investments in the global north, what are the implications for emerging and frontier markets?
Of course, there will be some positive for the emerging markets. They still have the higher interest rates, right? And so as there's flight from the developed markets. This is an opportunity, right? There's a lot of infrastructure going on. There are a lot of opportunities. There's the green investments opportunities as well. So there will be some implications for them as well.
Now, very fascinating story going on in China. For the first time, it's possible that India is going to overtake China in terms of population drive. This has huge implications for the globe because it is a manufacturing and supply hub for the rest of the world.
Yes.
Is this perhaps a sign that it's one child, one policy, which was lifted in 2015, may have been too little, too late for China's obviously declining population?
I think this is a really interesting story, right? Yes, they have now started to ease it, but we're now seeing the effects. Yes, right. But then all of those effects are coming at a time where there's high cost of living, there's an educated population, property prices are rising. People are finding that it's more expensive to have children, right? So the government may be trying all these policies to ease those policies, but because of the mindsets and where things are, people are not having that, and they are, not having as many children. So that's what's happening with what we're seeing in China.
Yeah, and with China, obviously contagion is the effect. What happens in China has huge reverberations.
Exactly.
If demand slumps, then that may be one of the triggers for a true global recession. Yes. We know that supply chains have hugely depended on China for manufacturing, for textiles, and many other raw materials. Yes. How do you see this perhaps interplaying with talks of a global recession now?
Yes. So for China itself, definitely, which is why they're doing all the policies regarding growth and all of that. So they are concerned. But for China, we see that there may be pressures on on the economy. There may be global growth, which may impede global growth. However, because of, like you said, they are integrated in the global economy. It's possible, that higher costs in China with the shrinking labor force could also affect other global economies, the US, the UK, and the world. So that's definitely very possible and likely.
Yeah, thank you. So final brief take on Nigeria not deciding to join this global tax deal. Of course, we know domestic pressures to raise revenue are key, but is this a wise move, you reckon, by the government?
I think, this headline it just came because they said, Nigeria is refusing to, but if you look at it, it's really a negotiation. So Nigeria currently feels that, this deal in its current form is not working for us, right? They're saying that it's going to exclude some corporations which they currently tax, right? So they're saying that if they can maybe carve out a scope for them, then perhaps maybe they can sign on to the deal. So it's not like, Nigeria is refusing completely to engage. They're saying that, well, we can't sign in its current form, but we are willing to engage if, there can be some adjustments made.
Yeah,
that's what's happening.
Interesting. Thanks so much for joining us on the show. Thanks for sharing your thoughts. That was Ifeoma Finnih, investment banker and energy and infrastructure executive.